Hello guys, welcome to Bhavna's Online Academy. So this is the final part of branch accounts, and in this video we are going to learn the part 2 of foreign branches, that is the non-integral foreign operations. Yes, so if you haven't watched the earlier parts, I'll link it in the description box below. You can check that playlist out. And yes, so now let's begin with the video guys.
So the next method that we are going to learn is what? Non-integral foreign operations. So non-integral foreign operations we have to learn. So here also the conversion, same thing only here also you have to learn at what rate you have to convert. The same, otherwise it is fully same as integral foreign operations only what we did. Only difference is at what rate you will convert will be different here. At what rate you are going to convert is going to be different here. Okay. So here what will happen is actually in our ICAI book, I did not find any question related to that. So I've taken a question from the practice manual. Okay. So yes, so first now let's see the conversion rate. Yes. So here what will happen is that whatever balance sheet items are there, that is your assets and liabilities, whether it is here, you will not think whether it is monetary or non-monetary. Current asset, current liability, fixed asset, everything. Whatever is a balance sheet item, take it at a closing rate. Take it at a closing rate. Income and expenses, that is trading PL related, whatever our items are there, convert it in average rate. Convert it in average rate. So balance sheet item, closing rate. Trading PL item, average it. Then you have a few exceptions like the same last time we had opening stock at opening rate, closing stock at closing rate, and the depreciation here will be at the rate at which asset is being converted. In our integral foreign operations, we converted the asset at the rate of date of purchase. So depreciation also we converted at the same rate. Now here in non-integral foreign operations, here the assets are going to be converted at what rate? Closing rate only. Closing rate only. So depreciation also at what rate will you do? Closing rate only, or the asset rate we can say. Asset rate is easier to remember. Okay. Then finally, there what happened? Whatever foreign exchange difference was there. Here actually what will happen is, once again I'll go back to the sum. Okay, it's gone somewhere, so I'll just leave it for now. So you will get a foreign exchange difference. So once you finish the trial balance, you will get a foreign exchange difference like this. So this foreign exchange difference, in that I don't know if we got a balancing figure or not. I suppose we didn't get, so that's why. So foreign exchange difference, whatever is there, you will transfer it to an account known as foreign currency transaction reserve. You will transfer it to an account called as foreign currency transaction reserve, whatever foreign exchange difference is that, and this will be shown in liability side of balance sheet, and it will be shown as one of the reserves. It will be shown as one of the reserve. So liability side of the balance sheet will show it. Okay, can we start with a question? I hope no doubts. Let's start with a question. Simple only. Okay, nothing too much, nothing to stress about here. Okay, so here Moonstar has a branch at Virginia, USA. Okay, the branch is a non-integral foreign operation of Moonstar. The trial balance is as follows. The trial balance is given as follows. The trial balance is given in US dollars. So this is the trial balance of Virginia branch, and this branch is located in USA. Okay, yes. So if we first will go what we have to do here. Okay, so here what they are telling, trial balance, you have to convert it into rupees. If you have to convert it into rupees, then there were two companies. Okay, one was Moonstar and the other one was, the Moonstar company had a branch in Virginia. That means where will be the Moonstar's head office? If you have to convert the US dollars into INR, if the branch is in US dollars or the branch is shown in US dollars, where will be the Moonstar's head office? This is not directly given in the question. This is what you have to understand by yourself, that it will be there in India. Someone has asked me, how will we identify whether it is integral or non-integral? In the question they will give you. Why? You don't have to find out anything by yourself. In the question, see, non-integral foreign operation, they have given the same in the last question you solved also. Directly they have given you integral foreign operation. Okay, so I hope that understanding of the question you have now. Okay, so now what you have to do is, now let's see. So here the trial balance, the same way they have given you: office equipments, furnitures and fixtures, opening stock, purchase, sales, goods sent from head office, salaries, carriage inward, rent rates and taxes, insurance, trade expenses, head office account, sundry debtors, sundry creditors, cash at bank, cash in hand. Then they have given you information. Okay, so here one point that I would like to stress about is that in the prepare, under the prepare, they have given you trial balance, incorporating adjustments, given convert dollars into rupees. Here in the last question we did we incorporate whatever was given in the adjustments in the trial balance, like your depreciation? So here in the adjustment, in the last question we had in the, when we are doing the IFO, we had in the adjustments depreciation. While we were preparing the trial balance, did we incorporate depreciation element in the trial balance, or directly did we show it in the balance sheet and trading PL? Did we incorporate it in trial balance? Yes or no? Answer me. If you did not understand the question, tell you did not understand the question. I'll repeat it again. You did not incorporate, right? But here usually you will not incorporate, but here in the question specifically they have told you you have to incorporate the adjustments. So here we will incorporate those elements and also prepare the trial balance. Okay, so I hope this is clear to you all. Okay, I want everybody to answer just to make sure that everybody understands it, but if you don't want to answer, then it's fine. Okay, yes. So here in the following further information, what they have given you is that first we'll start reading one by one. They have given you salaries outstanding $400. So what we'll do is we'll go to, so whenever something is given in the question, so this is a thing that I used to follow in my, when I was writing my examinations, while accounts or advanced accounts or whatever it was. So this is a trick that will help you solve the questions easily without making sure that you don't leave any of the adjustments. Okay, so what you have to do is, once you see in the adjustments column, down below, what you have to do is, here whatever adjustments is given, example, the first adjustment is salaries outstanding. So this is related to what element that is given in the question? So it is related to salaries. So what you have to do is, you have to go to salaries, put a star mark there, or you have to just write which adjustment it is related to, adjustment number 1. So you have to mention the number that, so that whenever you are picking up the salaries, that head, you will know that there is adjustment related to it. So you have to keep that also in mind. Or sometimes what happens, you'll solve the whole question, you will forget that there was some adjustment itself. Okay, so remember that when you are doing. Okay, so near salaries, we go and put a star mark here, so we remember. So salaries outstanding, what you will do, what will be the adjustment? This one will be shown in the liability side. Okay, as your outstanding expenses, outstanding salaries, you will show in the liability side of balance sheet. And the same way in the PL account, you will add this outstanding amount with the salaries amount, whichever is there, and show it. Okay, so I hope this and all you know. Okay, this is not something that you have to learn now. Then they have given you depreciation in relation to office equipment and furnitures and fixtures. Then head office send goods to branch for 15,80,000 rupees. Here directly they have given you something. Now go to the question. See if there is anything related to the goods which the head office has sent to branch. Head office sent to branch, head office sent to branch. Goods sent from head office to the branch. What is given here? Here $32,000. So for this, direct conversion is available here, which is nothing but 15,80,000 rupees. I hope you understood that. Next, head office shows an amount of 20,50,000 due from branch. That means in the branch account also there will be some amount which it has to give to the head office. Correct. So now what is that amount? We have to go and see. In the branch account, what amount it has to give to the head office? Head office account, $45,600 it has to give to the head office. So this conversion of $45,600 is nothing but 20,50,000 rupees. So I hope you understood. This is also a direct conversion. In head office books, branch is $20,50,000. That means in the branch books, the head office will be 45,600. So direct conversion. Okay, next is closing stock. Stock as on 31st March, closing stock. Then they told there is no transit items either at the start or end of the year. Okay, so just ignore that. Then on 1st April, one second. Oh, this chat box, wait a second. Yes. Okay, yes. So then they have given you exchange rate. So exchange rate, they have told you that on 1st April, that is your on 1st April 2010 was when you purchased your fixed asset. And the date on which you purchased your fixed asset, the rate was 43 rupees. Will this be of any help to us in the question? Where will we use this in the question? Where will we use this in the question? Can someone tell me? Where will we use this in the question, or will this be of any help to us in the question? Answer. You have office equipment, you have furniture and fixtures. It will be of no use. No use. You're sure? Right. Okay. So this will be of no use because for NFIO, we use the closing rate only. So no use. Just let's ignore that. No use. Okay. Then they have given you opening rate. They have given you opening rate of $47, closing rate of $50, and an average rate of $45, and an average rate of $45. I hope. Okay. So this was the question. I hope you understood what is there in the this thing. No. One second. Just go to, I hope you understood the question. Just let me know until I scroll down back. Now answer is easy. Now that you have understood everything, answer is nothing. Answer is very easy. Trial balance, if you complete, a major portion of the question will be complete. Then you have to just pick it up and write it in the how to differentiate between IFO and NFIO. That's what I'm telling you directly in the question they'll give you. Why are you guys continuously asking the same questions? How will you differentiate? In the question they'll give you that whether it is integral foreign operations or non-integral foreign operations. I've explained this point 2 times before this in the same session. Okay. Yes. So now let's start preparing the trial balance. So you have to write, okay, whenever you're going to write your exams, I mean, your exams are going to come, right? In the accounts exam, one thing that you have to very much remember are the formats: debit, credit, in the books of, trial balance as on, profit and loss for the year ended, balance sheet as on, asset side you have to write you have to write particulars, amount, assets, liabilities, everything you have to write. Format is very important. Just don't do the answer and come. Your whole answer will be right. 1 or 2 marks are less because you have not done the format correctly. If you only know the format, then we cannot do. But if you know the answer properly, then do the format also properly and come. Okay, remember that. Yes. So in the books of Moonstar, you prepare a trial balance of Virginia, USA branch. You now convert it into INR and prepare here. So what you will do is here first you take up. So here, see, I'll first explain it using this itself. So office equipment, so what rate you will do? Closing rate. Furnitures and fixture, closing rate. Opening stock, opening rate. Sales, purchase, sales, goods in from head office. All these are related to trading accounts. So all these, okay, just ignore this one. Here directly they have given us, right? So purchase and sale is related to trading account. So trading account average rate you will use. Goods sent from head office, directly in the question itself they have given you the conversion. Salary is related to PL, so that also will come in average rate. Carriage inward will come in trading account, average rate. Rent rate and taxes will come under PL, average rate. Insurance PL, trade expenses PL. This will also come under your average rate. Then debtors, creditors, cash at bank, cash in hand, all are what? All will come under your assets and liabilities in balance sheet. So in this all you will use your closing rate. Okay. I hope you understood this and you don't have any doubts here. So now all those items you have to pick and write it here. And also here one more thing that you have to remember is that you have to incorporate all the adjustments also. So first you don't need to go by the same order what they have written here. You can also start. Okay, the same order only they have also gone. Okay, so they have started with office equipment only. So office equipment totally in the question they have given it is $48,000. It is given $48,000 and the question they have given adjustment that there is 10% depreciation. So what is 10% depreciation on $48,000? $4,800. Okay, so you will differentiate this in rate. Then office equipment will come for the $43,200. Depreciation will come for $4,800. Okay, the same way. So then here you have taken the closing rate and converted. Okay, fine. Next here, furniture and fixtures. Furniture and fixtures, the total amount is $3,200 that is given in the question. But here you have to take a depreciation of 10%, which is $320. So the remaining balance you will rate here, furniture and fixtures, and this again you will convert into closing rate and rate. Then opening stock directly given, use the opening rate and convert it. Purchase, sales directly given using the average rate, convert it. Then goods sent from head office, directly in the question the conversion was given. Carriage inward will be converted using the average rate. Salaries, there was one adjustment which was open outstanding salaries. Outstanding salaries, what you will do is you will add it with the salaries in the PL. What you will do in the balance sheet, what you will do, two things you have to keep in mind. In the PL, what you will do, you will add it with the salaries amount. 3,200 plus 4,000 outstanding salaries, 3,600 is what you will show in the PL. So for what you are going to show in the PL, you have to use average rate and convert. That is clear. For the another 400 you will show it in the balance sheet. In balance sheet you will show us outstanding liabilities. So outstanding salaries. So outstanding salaries, when you show in the balance sheet, you will show it in the closing rate. You will show it in the closing rate. So this is, so I was telling you, this was one of the important point in the question in relation to the outstanding salary. That when you show in the PL, you have to convert it using average rate, and when you are going to show it in balance sheet, you have to convert using the closing rate. I hope that also you understood. Then rents rates and taxes you have, which is a PL item. So you'll convert in the average rate. Then you have insurance and trade expense, both are PL items, so you will convert into average rate. Then you have what? Head office account. For head office account, direct conversion was given in the question. Debtors, creditors, cash at bank, cash in hand, all of these four things will be shown at the closing rate because they are balance sheet items. And what will happen is, after you balance out the debit side and credit side of the trial balance, you will be left with a balancing figure on the credit side of 4,66,800. 4,66,800. So this will be nothing but your exchange gain. So this you have to show it in your special account, which I told you. What was the special account? Foreign currency transaction reserve. Foreign currency transaction reserve. See, you will go and show this in your special account here. Okay. So I hope you understood this. Okay. Now let's quickly put everything into trading and PL. Just go through trading and PL. Okay. So here I have a question for you all. Let me see who can answer. Here they told whatever is there given in the adjustments, you have to incorporate it into trial balance. In the adjustments, there was also something which was given as stock as on 31st March 2012, 21,500 closing stock. Why did we not incorporate it into trial balance? If you know, say yes. If you don't know, say no. If anybody knows, let me know. I'll give you 1 minute. I'll let you think. Then only the exam also you'll think why we did not do this here, why we did not do that here. Closing stock. Tell me. You know why you have not taken? Okay. Others, do you know? Do you don't know? If everybody knows, I'll not explain. I'll continuously go with the question. Don't know. Others. No. Okay. So you don't know why they have not taken it into trial balance. So trial balance, let's go back to 12th standard. That's why they tell you have your base very clear. Okay. So first, see, I'll explain whatever is given here first. So what is closing balance? So usually there are two types of companies. Okay. First, I'll explain you this. There are two types of companies. First is manufacturing company and the second one is trading company. Usually in the question, what we assume is it is a trading entity. If we don't what do we say? If it is not given in the question, we assume that it is a trading entity. Here also in the question, nothing was given, so we assume it is trading entity. So now forget that there is something like manufacturing entity, trading entity. So in trading entity, what will happen? You will purchase goods from outside, and the same goods you are going to sell. And whatever you don't sell will come as your closing stock. And whatever you don't sell is going to come as your closing stock. This is something that you know already. Okay. So here what you do is, so here they tell you that closing stock is the balance of unsold goods that are remaining from the purchases made. From the purchases made, whatever is left, whatever is not sold will be your closing stock. Okay. The value of total purchases is already included in the trial balance. So if you go and see the trial balance, already the value of total purchases we have included there. Okay, already the value of total purchases included there. So what will happen is, so here you have given total purchases, suppose 1 lakh rupees. Okay, now what happens in this 1 lakh rupees? What happened? You have sold goods worth 50,000 rupees. From this, what we understand is you have a closing stock of 50,000 rupees. You understand that there is a closing stock of 50,000 rupees. Now, again, if you go and write in the trial balance that you have a closing stock of 50,000 rupees, will this not be a double effect? Because here also 50,000 is there and here also 150,000 is there. Will this not be a double effect? Will it be there or not? So usually due to that, we do not show closing stock separately. So it will be, the effect will be double. So we do not reflect it in the trial balance. Okay. So the same way, what will happen is that if the closing stock has appeared in trial balance, then you will not show it in the trial trading account. You will not show it in the trading. Okay. Don't go in the second point. I hope the first point you understood. That's it. Okay, so that's the reason we did not show it into the we did not show it in the trial balance. Okay, so since we did not show it in the trial balance, now we need to show it at two places: trading account and your balance sheet. Okay, so here you will show it at two places. One is trading account and the other one is your balance sheet. Okay, now let's start. So see, opening stock, purchases, goods sent from head office. Okay, then carriage inward, sales, closing stock you write, and closing stock you have to convert at what rate? You will convert it at the closing rate. You will convert it at the closing rate. Then you will arrive at your gross profit. Then you have salaries, rent rates and taxes, insurance, trade expenses. Then what else you have? You have depreciation on both of these things. So if you do this, finally you will arrive at your net profit. After that, you will prepare your balance sheet in which you will have office equipment less depreciation, furniture and fixtures less depreciation, closing stock, trade debtors, cash in hand, cash at bank, trade creditors and outstanding salaries you will show. And the head office account you will show in the balance sheet, and whatever the net profit you got from PL you will show that also. And finally, whatever was there, your foreign exchange gain that you got, you will foreign exchange difference that you got, you will show in foreign currency translation reserve of 4,66,800 rupees. Okay, so I hope this is clear to you all. Any doubts? So this is what is IFO and NFIO. That's it. Our session is over. I'll just wait for one more minute.
So that's it for the video, guys. Hope you found this video helpful. If you did, make sure to like, share and also subscribe to the channel. And don't forget to click on the bell icon so you get notified every time I post a new video. Thank you.